Hello, trade pros. Hello, YouTube. Welcome back to the channel. And we are going to be discussing a pretty big topic that has been debated for a while and specifically fairly recently a lot. Now, as you might have guessed from the thumbnail, we're going to be talking about order flow today. Does order flow actually work, or is it one of those BS instruments that people try to funnel you into and try to sell to you? So, the lack of order flow working / is order flow actually useful to trade, I've seen circulate a lot, so I want to address my point of view and give you both sides of the argument today. So I'm going to be using the side that maybe order flow is BS, then the side that, oh, maybe order flow actually works. So we're going to be looking at that argument together. And one of the biggest questions that I get is, can I trade without order flow? The simple answer is actually yes, and we'll break that down. So I want to dive into everything, and then I'm even going to be making a video of how to trade without order flow, because I know a lot of people do it, and it doesn't mean that this one specific tool is going to make you profitable. It's just one of the tools in the toolkit for trading futures that I find a very useful aspect, and I'll be breaking down both sides of the argument. So if you guys are excited about this video, drop a like, hit that subscribe button. I'll see you guys after this intro. So as you guys can see on the screen here, we'll be using a few different charts. I'll be talking through some of the aspects of order flow, showing you some trades as well, and explaining and maybe even doing a replay on understanding how the order flow is actually constructed to see, is this actually a viable resource or is it just noise in the market? So first I want to dive into the arguments against order flow, right? One of the biggest arguments, right, there's threefold that I'm going to be talking about today. But one of the biggest arguments is that there are too many algos that drive prices back and forth, throwing in weird orders, fake orders, right? All this fake movement. One of the biggest concerns in general is that there are way too many algos in the futures market that actually derive prices and create kind of BS order flow movement. So where they throw in either massive passive orders to attempt to make a directional move and then pull them, or we can see large orders coming through and not necessarily moving price. Now, when I talk about these passive orders, if we take a look at this DOM a little more, you can see like the bid and ask column here where you see these orders lining up. Now, these are the passive orders. So a lot of people gravitate towards these, right? Specifically orders that might look a bit bigger. You can see right here at this 91, there are about 200 resting orders sitting there, and then the average is about 100. So a lot of people are blaming that this type of view on order flow is just algo driven. It's just impossible to read. They keep flashing up and down, and you can't get a very good read. Because even if I look at the price right now, we have heavier orders that are resting here, some heavier orders that are resting above, but they're constantly moving. So you're like, well, what's going on? So I'm going to address that as well. But one of the biggest factors as well is talking about NASDAQ, right? Jumpier spreads that confuse people on NASDAQ. More liquid moves, very thin order flow. And what I mean by this is people are starting to lose trust in order flow because it seems less fluid. That's one of the things. The fluidity in terms of how the markets move and how the order flow is read, I think is trapping a lot of people and looking at it being like, well, this doesn't really make that much sense. So when I read order flow, there's two main charts that I'm going to be looking at that we'll be discussing today. The main one is the DOM that you see here on the screen, and the other one is going to be the footprint that we're going to take a look at. So the argument here is that there are way too many passive bids and offers that are coming in to price where many market participants expect the move to go and eat those orders up. Like I previously addressed over here, you have these like significantly large orders, and you can actually see them moving in real time right now. They were at 91, then they moved down to 90, and compared to the rest, they're much larger. So this doesn't necessarily have to happen, right? This isn't one of the factors that deliberately actually creates movement in the market in terms of order flow. These are passive orders, and there are two criteria that I use that cause me to care about these orders that are actually shaping up. So number one, right? Are these orders actually getting filled? Now, that's a very important criteria because as you see here on the screen, these guys are just like holding these orders out. Like every time prices move lower, they kind of move these orders around. Every time prices move higher, they move this large order around. So are they getting filled? No, not necessarily, where people are going to look at this and think, well, okay, they're not going up, they're not going down. They don't want to fill either or. It doesn't really make sense. What's the directionality of this? And then number two, do they appear close to price and spontaneously? What I mean by that is if we're starting to see a momentum move, right, a directional move in these markets, let's say we're going up, right? Are these resting orders appearing spontaneously to try to chase price? That's what's important to me, because at the end of the day, one of the biggest aspects is that market orders are going to move price. So it's not these resting passive orders, it's the market order that comes in. So if something comes in like super aggressively, let's say like over here, right below price, and it's a very large order, right? When that fills, if that fills, it's going to create a little more directionality. If they start running away from it, then you can understand that there's a little more bullishness in this. So let's talk about NASDAQ as well, because NASDAQ is one of the main aspects that pertains to the, I guess, the fear of order flow, if you will, or the idea that order flow isn't something that necessarily works. So NASDAQ shows a lot of signs of less fluid movement, especially as of recent in terms of the orders that trade. To begin with, the NASDAQ DOM, if we take a look at it, is very thin in itself, right? If we compare both of these DOMs right now, well, we have on the NASDAQ DOM compared to the S&P DOM. If we look at like the passive orders or we look at the market orders, it's very thin. The book on NASDAQ is single digits realistically, then you have some big orders here and here that are fairly close to price. So this fluidity causes people, or lack of fluidity in the thinness of the DOM causes people to look at this and say, okay, well, one, the spread is fairly wide. It doesn't look super liquid. Two, when you see a large order on the book, right, you don't necessarily know what direction it's trying to pull and push into, which causes a lot of people to think, okay, this is fairly manipulated and hard to get a good entry and a read and a move on NASDAQ. It is a little more difficult to read, I would say, from an order flow perspective. It could really shake things up on the DOM if you're looking just specifically at these things, right? So what I'm trying to say here is, when I'm looking at the dominant order flow, there are specific criteria that I'm trying to set out, right? And if I look at this just blandly like this, right, and I'm seeing like big orders trading in at market, big resting orders, honestly, I don't really understand what's going on, right? This is one of the factors that causes people to be a little more, I guess, distant from order flow, saying that, oh, this is something of the past or it's some kind of BS. Because if I look at this NASDAQ, what did we just see? We just saw a large order that was sitting at 50 here, right? They ate it up. And then prices dropped significantly. They ate up the other large orders. So we're just kind of bouncing back and forth. It doesn't give you any sign of directionality, because what if it springs back up now? So it just ate up that large order. It ate up the large order to the downside. And I'm looking at this and we're pinned between about like 10 points of area. So from that perspective, right, and the spreads that are happening is very, very thin. You're looking at this and thinking, well, these like 1s and 2s and 3s aren't going to give me too much information, right? Because we could be trading these 1s and 2s and 3s. We get this push to the downside. If someone throws in a big contract, right, it's going to go up. So the fluidity is lacking there. Very, very thin DOM on NASDAQ. So NASDAQ being, I would say, a harder aspect to read from order flow. So when I'm looking at this, right, it could be algos. It could just be like large repositions, but they kind of come in sporadically and randomly that are discerning the quality and the aspect of actually reading order flow. Now, you can look at that in terms of face value, but I'm going to explain as to what the potential with this information looks like. Because number one, I think that people might be looking at it from the wrong perspective, trying to understand how these big orders are actually going to move price when they're passive, right? And also looking at big orders that might not actually converge or trade how they're expected, meaning like if there's like a large seller that comes in, why isn't the large seller going down? So that's the next part, right? And that's the next part, right? The second piece is that it's hard to read orders that are coming in, right? Specifically with this NASDAQ, what we're looking at right now, like I said, we're moving within a 10-point area that's not like presenting too much fluidity. So this is the second piece that causes panic in the order flow naysayers and people who are trying to read order flow, saying it's very difficult to grasp of what the order flow information that's coming in actually means. So throughout these like last few minutes, as we're watching this like NASDAQ DOM trade up and down, all we've seen is a bunch of just sideways movement where big orders are filling on both sides. And you're like, well, okay, is it going up or down, right? What's going on right now? So you can see a large buyer and the prices go up, right? Or they don't go up. And you're like, well, how is that consistent? How is that fluid? You might see a large seller and the same could happen. So the difficulty about this is watching these orders come through doesn't necessarily have the exact reaction as your expectations, especially in the most recent months. In the most recent months, especially when volatility starts dying off a little, you're starting to see less and less reactivity and fluidity in order flow, which causes people to say, well, this is no better than just drawing some lines on a chart and being like, okay, this is going to expand, that's going to break down, right? And there is some truth to that, because as you've seen just now, if you've been watching this NASDAQ DOM, not too much is happening. Not too much is actually getting quantified right now. You're seeing both cases. Am I long? Am I short? So the lack of volume, especially on NASDAQ, even the S&P has dropped off significantly, really pushes traders to question the validity of all of this. So as volatility comes in and more volume comes in, that could present a little more difficulty as well, because the orders start seeming all the same and the reactions start seeming confusing. Because, for example, if I'm looking at both of these DOMs, right, the orders are fairly equal on both sets, right? I don't mean with one another, but you can see the resting bids and the resting offers are fairly equal. The market orders that come in are fairly equal. Specifically on the NASDAQ, you're seeing single, barely double digits on the resting orders, and the same goes in at market. So if you see a bunch of areas that have similar orders, right, but price goes down, you'd be thinking, okay, well, what is triggering this? Because let's say the NASDAQ starts selling right now, and we've been watching it for the past few minutes. You're like, well, what really triggered that? I've seen both sets of the orders coming in pretty much the same, and nothing looks like some kind of imbalance that would trigger my thinking being like, oh, okay, this looks like a large sell, this looks like a large buy, realistically. And that kind of brings into question, a lot of these moves might not be super understandable based on just order flow. Leaving a few instances a day that might be understandable, right? Maybe you can pinpoint an outlier that creates a large move based on some kind of order flow that makes sense to you. So this is a problem in trying to read what's going on. But then again, I don't think that the edge in reading the DOM or the order flow is watching every single tick of movement. Because all we've done so far is look at this 10-point span on NASDAQ, and we've come up with no conclusions, right? And in that factor, I think that order flow is a very difficult thing to read and understand, because the more it just rotates, the more it just creates this very equidistant buying and selling, right, between these areas. It just tells you, okay, what am I really looking at? For example, we had a large order that came in here that went market sell at 50 lots on the NASDAQ at this 839.5. So that's a decent seller in regards to what NASDAQ is used to. So what happened from it? Absolutely nothing. Did price go down? Not necessarily. Did price go up? Not necessarily. So you're looking at that being like, well, that doesn't really present too much of an imbalance to give me an understanding of what's going on. Now, the third aspect that is an argument against order flow, I would say that orders aren't necessarily reacting as they're expected or supposed to, right? Specifically, I think in the last few months, even year, where a lot of people were maybe used to seeing very, very obvious moves in order flow and just being able to directionally position themselves. For example, if you see a lot of people getting trapped in a large seller that comes into a high, you're like, okay, this is going to turn around. This is where I'm going to get short, and we're going to expect that drops. But it seems like algos and markets have been getting more and more efficient, where there's a dance, there's a fight. That happens, and they rotate for a bit. They want more people to come in on the sell side. They want more people to get trapped. And eventually there could be a move, right? So it's not as obvious per se as it might have been before, or when markets were trading at thicker liquidity. So this might be the biggest concern that people have with order flow. I see hundreds and hundreds of sellers coming in, but the price won't go down, or the opposite. This frustrates a lot of people. And looking at order flow, they're like, this doesn't make any sense. Right now on NASDAQ, we've seen sellers try to hammer this. So this is bullshit. Why isn't it going down? So as of late, right, when more volume enters the market, larger participants, which can contribute to larger moves and algos, larger positions, traders try to jump in on a move where they see these large orders that come in, whether they're sell orders or whatever, and it kind of goes against them. They're like, well, I don't even understand what just happened, right? They take a stop or whatever. So a lot of this is being very reactionary to the move that transpires rather than looking at the buildup, I would say. For instance, if I see a lot of sellers coming into a move and they're reacting to the sell, right? It's an area that I want to sell. I'd anticipate that sell, right? So it does depend on where that move is coming from as well, what the move leading into it looked like, right? But sometimes you're looking at it, you're like, well, they're selling a lot. Why is it going down? So take this for instance, right? Price drops on the ES 10 to 15 points, let's say. And you see continued sell coming into the lows, right? There's just continuous sell. And you're like, oh, okay, I'm expecting more. And I want to see the downside open up. So I start selling into this low. So you're looking at it, and this is where the confusion lies. If there are thousands of lots selling, right, and there's no heavy buy side realistic, you're thinking, okay, why the hell is price not going down? This is where the understanding of reactions based on order flow comes in. I think it's more of a misinterpretation of the order flow more so than not working. But I think there are indeed periods where we can have a harder read on order flow, as we can have a harder read in the markets in general, right? Regardless of what you use. So this is coming into periods of just like slower market movement where you see very equal market buyers and market sellers, because realistically over the past like multiple months we've had fairly low VIX, right? Very, very low VIX. Volatility has been very low. So it's just kind of like passive movement in the market, and then all of a sudden you get a push to the upside or the downside that spans 20, 30 points. So you might be thinking, okay, well, what the hell is the use of this order flow if I can't even read that or understand where that's coming in, because everything looks the freaking same. So to argue that, to counteract that, right, I'm going to talk about those three things, right? Those three aspects. Number one was seeing too many algos or something of the sort, right? Driving too many weird orders, passive orders that don't really make sense. Number two, harder to read those orders that actually come through. And then number three, orders aren't necessarily reacting as you expect. So let's talk about this from a different perspective, right? Now, I've broken down as to why realistically it might not make the most sense to just like live and die by this order flow. But let's also go in on the other side of that, right? The argument made that there are too many algos manipulating prices can be fair, right? I think realistically, order flow, algo movement or not, is legible in essence if you're reading the key aspects as it was meant to be read, right? The market orders can't necessarily hide. This is what order flow comes down to, right? Market orders that have reaction and movement, right? As I was saying that, what did we just see on NASDAQ, right? We were just complaining that all of this selling on NASDAQ from 830 all the way up to 840 wasn't doing anything, right? And then all of a sudden, boom, you're down about 20 handles. So what gives? What's going on there? It's not necessarily the instantaneous impact that it might have, but the creation of this order flow in general, where we've just had a significant move, and you can see on the DOM there are large sellers that are coming through. So a lot of people might look at this and be like, okay, they keep selling, let me sell this low of the move. Careful with that. So there are some instances where you might see some attempted buying into a low and it turns out to be false, where you can make the argument that algos can't be controlling prices. However, for the most part, if I read order flow at face value, meaning that I'm focusing on the market orders that are actually coming in and the reactions to those orders, and realistically, I stand a pretty good chance to understand how not to get sucked into those moves, right? If I understand that the reaction, the speed is what I am looking at, what I'm after in terms of order flow, I'll just wait for the confirmation of something like that. So, for instance, right, I can see just like chop and like nonsense movement, and it just like holds out. You see order flow coming in on both sides. You don't have to get active, right? Order flow could be selling at the highs, buying at the lows, but nothing at all happens. You might want to wait for a little more fluidity in action. And this is where the concept of rebidding and reoffering comes into play. Meaning, if I have an area where I want to see the buyer step in, I would want to see the sell side vanish or get sloppy. So if I'm looking at this DOM, right, I'm going to be looking at these like market sellers, and I want them to either get trapped or just like vanish completely. Meaning, like, if large market sellers come into the lows, I want to see buy side against it. If I'm going to be a buyer, I always need to see the buy side. If I want to be a seller, I always need to see a sell side. So a rebid helps me confirm that this reaction is actually happening. So there's a lot of selling into a low. I don't know exactly where to show you. We'll do a little replay, but if there's a lot of selling into the low, and what I see is just like reactive buying against it, reactive buying against it, well, that's telling me, okay, you know what? This is a point where there can be a reversal in the market, and I have a high probability of trying to get into something there. So, meaning the rebid is the market buying, creating a strong push to the upside with fairly heavy buying and continuously doing so. So like if I see one bid that comes in and it pushes price up, well, that could get a lot of people sucked into this and be like, boom, there's the buyer, let's start buying this. And then the seller comes in and nukes it. And you're like, well, what the hell? I just saw a buyer reacted well. It's the constant fluidity of confirmation that creates that concept. So if I see like massive sellers coming through, and I'm like, you know what? Like they look a little tired. They're getting a little stuck. Well, okay, let's wait for that first buyer. First buyer comes in, pop, right? Market jumps a bit. And then I'm like, okay, right, fair. But we're still in kind of like a downtrend of a move. Let's see if they want to continuously rebid this. So are there buyers continuously fluidly coming into this to defend that price? And then boom, okay, that's when I know that there is the possibility of me entering into this position, which is something that we're gonna look through in a replay. And I kind of want to do that right now even. So let's take a look at this, right? I'll talk about like this trade over here that we did in the morning session in our room, where we picked out some of these lows on the S&P, where you can see, okay, it comes down into an area after a pretty big drop, right? We dropped from 5,500, we dropped around 30 points. So why am I buying this, right? I'm just looking for an area of fluidity in terms of the order flow that tells me that there are buyers in that region, right? And then there's another aspect over here, down here, where, yeah, okay, you have this 40-point drop. So why would you want to buy that when you see a lot of sell pressure coming in? So that's where order flow is useful, where I can start to see the failure, right? The continuation of whatever side that I want to get on, right? Prevail. So let's take a look at that, right? We'll pause this, load up the replay, and then we'll take a look at how this thing shaped up. All right, so let's look at the order flow that's coming into this on this replay here, and take a look at what's going on this DOM on the S&P. As we could potentially find some kind of indication, right? If you're watching this and you're not necessarily that fond of the DOM, right? There are other order flow tools, for example, like if we bring along this footprint over here, we can get a good understanding of what's going on in terms of the footprint perspective as well. So again, what I'm looking at is I don't want to get caught up in the movement of like buy, sell, buy, sell, buy, sell, buy, sell. I want to see something that's like very reactive. I want to see something that's very aggressive for the buy side that comes in if I'm going to be a buyer into these areas. So let's see if we can locate something like that. So when I constantly like pause and redo this, it shows up. So if I'm looking at this, right, what are some of the criteria? What are some of the criteria realistically that I'd be looking for on the order flow perspective? So if I'm trying to be a buyer, right, I want to see a very reactive buy. So far, if I'm looking at this, you might be thinking, well, okay, both sides of the orders are coming in, they're freaking the exact same, right? Like you have nothing here of validity that tells you, okay, this is going to be a buy side or this is going to be a sell side. All these orders are the same, which might bring out some confusion. So that's exactly why I'm looking at something. I'm looking for something that's very blatantly imbalanced at these prices. So if I'm looking at like the footprint, what I'm looking for is like very heavy like negative delta and like positive delta that like rebids it super aggressively, right? You can see over here, you have these single prints on like imbalanced sellers. They're holding against them. So that's telling me that the sell side's still strong. If I'm looking at the DOM, if I'm watching the sell columns and there's constant like 200-300 orders that come in and they keep pushing prices lower, keep holding the reoffer, I don't want to get in front of that, right? I want to see big buyers actually coming in on the rebid, and let's see if we can locate something like that. So as things stand, right, we've seen a large downside move. Nothing's necessarily happening. If I'm reading this step by step on the DOM, I'm looking at these like fairly equal orders. 300 comes in on the offer, right? They try to hold against it, but they keep holding down. A lot of people might have seen that 300 buyer and started just jumping in aggressively, right? You have this like huge market sell that keeps holding prices down. Very big orders on the sell side. So it's like, I can't jump into the first frickin' buyer I see, you know that? Like if I see like a 600 on the buy, 700 on the buy, and like it's not reacting aggressively to the upside, like this is just allowing the sell pressure to come in. So I can't just jump into this and be like, oh, that's a big buyer, let me just hold on to this, right? Like I would have been stopped twice now, it seems. So I'm watching to see if there's any kind of real obvious imbalance that comes in for this buyer to step in. Otherwise, like there were opportunities to just continue this short. So you can see they're still selling, right? It's 300 coming in on the sell, 200. So you're starting to see some potential. So like 300 comes in again, 400 comes in again, 300, 600 now buy, right? So 600 on the buy. What happens? Nothing really that fluid. Let's see if more buyers try to come in. So you can see they left behind a trace of pretty positive delta. But like, again, we're trying to find the concept of a rebid, meaning if a big buyer steps into somewhere, I want that big buyer to continuously try to hold the same area and come in on the bid. So it's not enough for me to be like, okay, there's like a shitload of selling that's coming in here. I can buy against that. They're not really going anywhere. I gotta wait. So you got a big buyer that reacts prices up here at 71, right? This like 500. So like I'm watching for a rebid into these 71s now because I got that initial buyer. A lot of selling comes in, jam into these lows. So let's see here. right? They keep trying to sell into this, right? So I'm like, I can't touch this right now. I can't really touch this. If I want to be a buyer, I can't really touch this. Because every time a big buyer comes in, the sell push to lower. So okay, there was a decent buy, but the size on the buy wasn't that creative, right? It wasn't that great. So right now you're seeing a better reaction where you have like single prints, a lot of people stuck into these lows, very nice momentum on the buy side, right? Even over here, they're trying to buy. So at this point, you might be thinking, well, where the hell was the long, right? I didn't see it down there. That's where it was. So now my thought process, if we can come back into the 72 where these buyers sprung prices up, that's where realistically I can look for some of that information to help me on that buy side, right? So there's obviously some kind of rebid and people are stuck on the short side down here. So if we come back into this like 72, 71, right, I got to be looking for something similar, right? So right now I'm starting to see, okay, there's a pretty big buyer that's trying to step in here into this 73. So my question is, if we come back into that area, is that buy side going to be supported, right? So now I'm starting to see these imbalances a little clear. There's 200 orders coming in. You have a large seller that's getting jammed, large sellers that got jammed into these lows. You have like a 600 buyer that pushed prices up from 72. So if we can constantly try to rebid these areas, right, that makes for a pretty good potential long opportunity. So I don't want to get trapped in the idea that, okay, I see large selling, large buying continuously everywhere, right? If they sell a decent bit from 79, that's okay because I'm trying to hunt the long from 72, 71, right? I want to be long from those areas down into that spot. I don't want to be just like trying to sell when I see the first seller or trying to buy when I see the first buyer. I want to see the story get created. That's one of the better ways to read the order flow. I want to see the transition of what is happening. So if we get a large move to the downside, is there going to be a point in time where some like large buyer steps in, or is the sell side going to continue, right? If there's an area where I want to be a buyer, I'm going to be looking for those constant bids, those rebids to hold out. I don't want to go, okay, every 3 ticks, every 3 points, I see XYZ order flow coming in. I can make some kind of educated guess of me trying to scalp up and down, right? So what happens down here is they leave behind a trail of these sellers yet again, right? You see single prints down here, heavier delta, they come in, they rebid it. So I'd be pretty interested in trying to get along into this 72 area, right? So if I'm trying to get along the 72s, I know that they've been constantly bidding it. You can see single prints over here, imbalances, they rebid from here. So there's a large buyer that came in 200s on this test of these 72s the last time, right? Even into the 75 right now, they're trying to buy a little more. So they pull down, right, to that 72, 73 yet again. And I'm watching right now, right? I want to be long into these areas. So what I see right now is these sellers are still trying to overwhelm this. Some buyers come in, right? There's a nice little pop on the bid. They're still trying to rebid this. Are they going to rebid that 72 again, right? They threw in another large buyer over there. So at this point, right, I could say, you know what, like it seems feasible for me to try and get on this long. Now remember, this is just a replay, so I'm just trying to identify where I could have been on the long side from there. Just constant rebids that are coming in right at the area that we care about. So like my stops are protected under the current lows. You can see like 200-300s that keep buying against those sellers that keep coming through. So every time we pull down, what's good about this, and like helps me on the order flow factor, is okay, there are sellers, but every time the seller comes in, the big buyer says, okay, thank you for the liquidity. It's time for me to buy, right? So every time a large buyer comes in against these big sellers, I get the confidence that, you know what, the fact that they're reacting, right, to the upside aggressively from this is why I'm looking to take that trade realistically. So there's a trade that I showed you earlier on. So every time these sellers come in, a big buyer steps in. It's been constantly going along throughout this whole time. You saw right here when that first buyer came in against the big sellers from 73 all the way down to about 70. We're getting the confidence that this is indeed something that's shaping up for that buy side, a potential low. So when it comes to the order flow concept, it's not like realistically I'm looking at this like every tick everywhere, like, oh, okay, there's a big buyer, there's a big seller. Why aren't they going down? I'm looking at it from the perspective that I have areas in mind and I'm trying to discern what kind of buying / selling is coming into there. So I'm just mainly trying to pinpoint the entry, but it can go a step further than that, right? So the second point that I made that was an argument against order flow was that it's getting difficult to read, harder and harder to read the order flow that's coming in. And like looking at that demonstration, might have been like, what the hell is this guy looking at? So I do agree in some cases, right? Especially with NASDAQ, I find that most people get very trapped in the movement of the DOM in real time, every single little move, every single tick. So especially when you're looking at momentum and movement that happens very quickly up and down, it can be a little convoluted, especially if you're not scalping, because scalping, you can get a better understanding of what's going on, like tick by tick from the order flow. But I'm not watching every nano movement, right? So I think it's very good practice to watch the DOM as it creates buy and sell momentum and strength throughout the day, because it helps you stay on side as well. But I think one of the things that really eliminates constant confusion and no real directional read is focusing on areas that you care to trade about the most. So you can use many different aspects of this, right? For example, auction market theory, delta levels, just support resistances. That helps you, even just like identifying order flow from like past days, past sessions. It helps you identify the context of what's going on, understanding the market where it is, so you can actually get a control of what you want to see, where you want to see based on the order flow, without trying to get too biased about it. So I find that it's good to watch who's generally in control. If I can see some constant buying, like in this situation. So we found where the buyers were trying to come in, and realistically what we're seeing was just like constant, very, very large buying. Very, very large buying throughout, very fluid buying. But there's this point in time right now where we can start to see that that buying isn't as strong. So you're seeing very large orders coming in on the buy side here. 400s, 300s, but it's becoming an issue, right? When you see that much aggressive buying and they can't push up and the selling starts to come in, you might be thinking, well, it might be time for these guys to kind of let this thing go and allow prices to pull down a little more. So I want to see these kinds of moves, right? I want to see the larger directional moves where I can understand how the order flow was created from there. So a very nice large buy that happened here, but they're getting a little stagnant right now, for instance. And then one of the final pieces is that traders generally negate the power of order flow because of the reaction and their expectations. Because they're thinking that, okay, order flow is going to be something very obvious that you look at and you're like, oh shit, okay, buy, sell, buy, sell, buy, sell. Very, very easy, right? Usually people see heavy orders coming through on the sell side, let's say, and they think, okay, this is where the heavy seller is going in to keep control of the market. They start shorting, but it happens to be a low, right? For instance, what we were looking at down here. So we got this massive move to the downside, right? Pretty big. And you see a lot of selling getting into these lows, where at some points, right, it does make a lot of sense. But at a certain point down here to the 70, that selling starts to dissipate, where a lot of people are like, oh, they're still selling. Let's just keep selling this and everything will be good. But they end up selling a low realistically. So I think it's more of a factor that they're not necessarily aware of what they want to see or what they're looking at for that matter, or to happen in or should happen in these situations. I think it depends on where this happens, and if I see a constant barrage of selling at a low, right, of a move, that I would probably get weary. If every time the buyer tries to step in, they hammer the sell and actually move prices lower and lower and lower, well, I don't want to get into something like that, right? But if I'm seeing a situation like we just looked at where they're just constantly trying to buy against those sellers, well, I'm a little more comfortable trying to buy from that area. So it also depends on where this happens, right? If I see a constant like drop, like for example, today from 54.90 all the way down to about 54.50, about a 40-point move, you can see that there's continued selling, right? Especially into this low, but it's about the reactions. If the heavy selling wants to continue selling at lower prices, or, right, is this an area where they're getting congested and we can see a bid? So if that constant rebid starts setting up, then I can start looking at this as a turning point. So let's just fast forward into that and see how that kind of shapes up in terms of the order flow aspect. So let's take a look at how this sell shapes up. So we start like offering realistically from an area where you can see that there are some convoluted longs that got trapped, right? So some of these longs got trapped into this area, and we're starting to see some downside sell. So if I'm looking at this, I'm thinking, okay, well, is there an area over here that I might like to see some long shape up, right? Maybe down into the 70 again, where those longs came out earlier. I'd be interested in that. Right now, if I'm looking at this DOM as well as this footprint here, what I'm seeing is that there's a lot of people that are kind of getting trapped down here. But the question is there enough buy momentum to help me jump on the buy side of this? So that would constitute like the rebid continuously. So right now is just like, if I'm looking at this DOM just like blindly, like every single freaking tick, I'm not getting that information that I want, right? I want to make sure that I'm looking at it in the areas or when like a big reaction gets like what that happens. So if I'm looking at this area here, yeah, okay, there's some like decent sell like that's getting trapped. Are there people that are trying to buy right 300? So maybe this makes for a decent little long over here. But if we fast forward a little more, you can see they just like let go of this, right? There's just like constant selling that comes in. So it's a matter of like, okay, am I trying to get long at specific areas? If I look at this and I start thinking, okay, there's a lot of people stuck on the short, right? Maybe I try to buy 65, right? And then what happens? If I don't wait for the rebid, I'm just looking at this just right there at face value, then I'm going to get like chopped up out of this. So I see a lot of selling that's coming in congested at 65. I see, okay, there's not really that many buyers. If I'm looking at this DOM, if I'm looking at this, right, the footprint, is there any significant heavy buy side that comes in that actually offers some of these pops? Right now, not necessarily. If anything, there's just continued selling into this low. So I'm just looking at areas, right? This brings into one of those big points. I'm looking at areas that I'm interested in trading. I'm not just always constantly looking at this order flow being like, okay, they're moving up, they're moving down. Okay, there's a lot of sell side that's getting jammed up in here, right? A lot of big selling that's getting congested down here. Well, okay, great. There's a lot of selling getting congested, but is anyone coming in on the buy side to tell me, okay, this is right for the pickings? I can get long. Every time a big buyer comes in, they just sweep it back down on the sell side. So I kind of just got to leave this alone at this point, right? So if I'm looking at this, right, more selling comes in. Who's on the buy side? They buy like 150, 200 lots, and they just like pull immediately lower. So I can't necessarily get in on this long, right? So they try to pop it with about 160 on the buy side there, right? I kind of like that. If they try to rebid it again, I don't mind that area to try and pick out some of these longs because there's congestion on the sell side down here. So they're starting to look a little better. I'm just having some issues that there's not too much buying into this low. Every time the reoffer comes, or every time the bid comes in, the reoffer just slams it back lower, and there's just continued selling into this low. So if I'm looking at this and I see like, okay, 250, 200, like 300 coming in on the buy side, right? 300 on the buy side, 300 on the sell side. Who wins that battle? What I'm seeing is like it tries to trickle lower for that seller to come back in. So I'm like, I don't want to be behind a buyer that can't even move a few ticks to the upside. So that disqualifies the idea of them trying to rebid. The rebid is just a constant barrage of people coming in market buy, trying to hold an area, trying to hold that bid. So if I'm looking at this, right, 300 comes in again, trying to hold that bid. Right, where do we go from there? 350, 360, and then they pull lower. So I can't get behind that. Just because I see a big buyer over there doesn't mean I want to buy it because they're not holding. They're not doing anything to actually confirm any of that upside. So the next area is closer to like 50 realistically. And right now, so this is what I like. This is fairly interesting. So if we clear this, we see a massive negative delta. We see a lot of selling coming in. They hold the bid there immediately at like 53. So my question now becomes, if I can see a lot of heavy buying into this area again, right, that tells me that this is going to be a point where I could realistically look at this and start to see a flip in this. Because all I've seen right now is like heavy selling. If I'm trying to read order flow from a perspective that's actually going to give me any kind of validity in these markets, I have to make sure that I'm watching out for very heavy imbalances. You can see the footprint over here is imbalanced. The DOM's fairly imbalanced. I'm looking for these imbalances that create these moves. And I'm just trying to look at, okay, are they trying to hold the bid? Are they trying to hold the bid? And if I see these guys try to rebid a few times around this area where they just like pop with heavy buy orders, then okay, great, right? I can jump in on this. Otherwise, I got to just let this thing go. If I'm not on the short after those guys sold and they got trapped into that high, I'd be looking for a long at some of the key areas that I'm trying to pinpoint realistically to get that reversal. Because if I look back on this, right, 300 comes in again, trying to hold that bid. 300 on the buy side, 300 on the sell side. Who wins that battle? What I'm seeing is like it tries to trickle lower for that seller to come back in. So I'm like, I don't want to be behind a buyer that can't even move a few ticks to the upside. So that disqualifies the idea of them trying to rebid. The rebid is just a constant barrage of people coming in market buy, trying to hold an area, trying to hold that bid. And if I see these guys try to rebid a few times around this area where they just like pop with heavy buy orders, then okay, great, right? I can jump in on this. Otherwise, I got to just let this thing go. If I'm not on the short after those guys sold and they got trapped into that high, I'd be looking for a long at some of the key areas that I'm trying to pinpoint realistically to get that reversal. Because if I look back on this, right, Number one, you can see that was a massive sell realistically, huge sell and imbalanced orders that came through that. So I can't be a buyer of this, right? No one's buying this. I don't want to be a buyer. So like there was an idea over here where we sold off from, where we could start to see that people are getting trapped on the long side and some heavy offers were coming in. You can see these imbalanced offers, right? That tells me, and they're re-offering, that tells me, okay, right, this could be a decent short. But if I'm not on that, and I'm trying to find an area that, you know what, I think this is going to reverse based on the information that I have. I'm going to be looking at this and trying to pinpoint, okay, are there any real buyers coming in? No, but what do I have right now? I have the idea of a lot of people that are imbalanced on the sell, right? From 54, 53, 51. So huge imbalances. What that tells me, if we can rebid above these, I can buy into them because these guys get pushed aside. That's a huge factor. When I can find areas of imbalance and we can dismiss those, right? That tells me that there's some buy side pressure. Right now, for instance, 500 go sell, 500 go buy, 400, multiple very heavy buyers into this low at this 49, right? So maybe I could get a little aggressive, and if they keep buying into that 49.50, I can jump on board, right? Or I could just wait to see if we can actually hold a bit above these massive areas to get that type of reversal that turns price around based on this order flow. So right now we're trying to fight against this like big imbalance that created prices to go down, right? We kind of pushed through it. We're trying to fight against the next big imbalance. It's going to be a lot harder because this one's very, very large. And you can see, right, there's constant buyers that are trying to come into this market, that are trying to push prices up with like decent size. But again, I don't necessarily want it. Like, let's say I try to get long here. The issue is like my stop's not necessarily protected under these lows, right? So if I have a slightly wider stop, maybe that would work. But I got to be careful with that. I don't want to widen it too much because right now what I'm seeing is just like heavy buying. This is what a rebid looks like, right? Every time we try to pull down, the big buyer steps in, right? We're trying to fight these like massive sell imbalances. So if I'm looking at this, I want to pinpoint, okay, where'd those big buyers come in from? Realistically, we saw like 500-600 down here at this 50. That would be the ideal spot. But as we can see, right, we're pushing through these heavy imbalances and very, very big buyings coming through. So I want to be very selective with this. Like realistically, maybe over here would be my best choice a lot around 50-51. If we can come back, pull down and hold that bid, that makes a lot more sense. Because you're starting to see the transition here in terms of the order flow. You're starting to see how the order flow changes. Before it was just like sell, sell, sell. Every pop got sold off very aggressively, where the orders on the sell side were very large against the big buyers, right? But right now what we're seeing is buy side is coming in with like heavier orders. They're trying to hold the bid. And every time we pull down, a big buyer steps in and kind of defends that price. So that's not what we've seen so far on this downside move. So as this thing shapes up, right, I think one of the biggest mistakes people make with order flow, and even in markets in general, is they put a lot of pressure on these like very small, minute moves. They're looking at order flow, this DOM, every single freaking tick. They're looking at the footprint every single freaking tick. And it puts a lot of pressure and gets people very excited when these moves happen. They chase, they become emotional, right? They have the fear of missing the move, right? They jump in too late. They don't let prices come back into the area that imbalance actually happened, which is a huge mistake when trying to read order flow. So the best way, in my opinion, to read order flow, as well as just trading in general, is to outline a scenario where you have like certain criteria. The scenario is based on something, right? Whether it's prior order flow that happened in the case of Delta, right? Or in the case of where big buyers came in on the DOM here, where the Delta accumulated and we got trapped on the footprint, for example. Or overall auction market theory, where we can find balances and imbalances in price. So you want to have that understanding of where to trade. And one of those things that I do as well is wait like 15-20 minutes off the market open to see who's in control, see how the order flow flows, right? What positions are coming in, so I have some kind of reference. So in essence, there's a lot of questioning about the validity of order flow realistically, and I think there is some truth that it might have gone a little more difficult to read, or it might be something that has, like, depending on who you ask, but like a lot of people are saying that it lost a lot of validity. However, the argument that I make against that is that there are ways to read it. There's malleability to order flow, that you want to use order flow in conjunction with something else to get a better understanding of what's going on in the overall context. I've never used order flow by itself. I've never just stared at the DOM or the footprint to give me an idea of where to trade at, right? I've always looked at other things to bring in the context of things. So I think there could be some truth to it working and not working, but I think that it depends on how you actually go about trading order flow. Like many things, I'll be using multiple different aspects like option market theory. So in essence, is order flow necessary to trade? Is this the holy grail? Is this the ultimate edge? I'm honestly going to say no. And I'll even make a video on trading without order flow to prove that that can't be the case. But I think there is a lot of validity in terms of pinpointing where markets get exhausted, where they get absorbed, where big players come in, where you can pinpoint the location of an entry and even an exit using order flow if you understand how to actually read it correctly. So some of the aspects that I like to look at in terms of order flow, in terms of reading it correctly, are that don't look at it step by step. Don't look at every single tick. Start off with trying to just generally understand how the fluidity of the order flow is coming through and specific areas that you want to trade. Order flow is based on reaction speed and imbalances. When I see significant imbalances like these here on the S&P, that's when my eyes light up and start to look at this as a potential move in terms of a reversal or a continuation, because you have these massive imbalances in prices. That's where order flow helps out, trying to pinpoint those very imbalanced moves where you can take control of them. It's not like algos control every single aspect. It's not like algos are screwing everything for order flow. They're making like fake bullshit positions here and there. If the market order comes in and you have movement based on the market order, reaction based on the market order, that's what's going to trade. So I hope you guys enjoyed this, I believe, thorough video on order flow. I think it's a little long and extensive. But if you did enjoy it, right, drop a like, hit that subscribe button, and comment down below what else would you like to see. Are you a order flow fanatic or very anti-order flow? I know there's a lot of debate going on about order flow, especially over these last few months. And I want to make more order flow videos to help you understand that it's not just looking at it just blindly and trying to analyze what's going on. It's in terms of context of what's happening. And I'll prove that with another video where we're not going to look at order flow at all even. So hope you guys enjoyed this video, and I'll see you guys in the next one.